to another trading video today. I hope you're enjoying the ones so far. And today we're going to be talking about some, I wouldn't say basic, but some elements that we should talk about. Okay. Now especially the three top elements are elements that sometimes get overlooked a lot when people trade. You know, people find themselves rushing into trades without doing the maths behind it first and working out what you can gain, what you can lose. All right, so we're going to touch on them today and try and get you into a different habit of making sure you are calculating things like stop loss and take profits before you even think about entering trades. Okay. Now, if you're not sure what RTR is risk to reward. All right, and I'm going to teach you about that today. If you're not sure what it is, if you know what it is, fantastic. You know where this video is going. We're also going to touch on sniper entries, and I'll get into that as the video progresses. But I feel like it's going to be a big help if you're not sort of sure what a sniper entry is, and I'll get onto that later on in the video. So, what is a stop loss and a take profit? So the setting for this is, let's say you're in a trade. All right. The stop loss is there to pull you out of the trade with a minimal loss if the market goes against your position. Okay, so for example, say if you've bought, I don't know, a currency pair, and the market then turns bearish, your stop loss is there to take you out before that move continues and drains your account. Okay, if you don't put a stop loss and that move goes down, the only thing that's going to take you out is if your account blows and you've got no money to trade the rest of that move. Okay, and obviously a take profit margin is there to take you out of the trade when you hit your desired take profit target. All right, and we're going to get into, I'm going to do a video on take profit and solely, so you can see how to properly set a take profit. If you're not sort of sure how to do so, we'll do a full video on that in the coming weeks. So what is a risk to reward ratio? A risk to reward ratio is the percentage of what you can lose in a stop loss compared to what you can gain in a take profit from a specific trade. For example, let's say you have £1,000 account balance. Okay, you start with £1,000, good number to start with. All right. Now let's say you risk 1% of that in a stop loss. All right, that's £10 of your account balance gone. All right, so you're down to £990. All right, that's a 1% risk if you lose that trade. If your risk to reward ratio, so 1% loss to a 3% gain, and you win that trade, you'll be gaining £30. All right, which is 3% of your account. Now, if your risk to reward ratio is 2% to 5%, you're risking £20 compared to a potential gain of £50. It's really that simple, guys. All right. Now, work out your percentage according to your account balance. Okay, so work out what is 1 or 2% of my account balance right now. Doesn't matter if you've got, you're not at a whole number. If you're at like something like, I don't know, 958.53p, yeah, £958.58p or whatever. Work out 1 to 2% of that and use that as your 1% risk or 2% risk. Okay, so if your account is £300, 1% would then be £3. Okay, I advise always risking no more than 1 to 2% per trade. All right, because if you risk more, it gets into bad habits, and in the long run, it won't be a good idea. All right, because then you'll start risking 5% because you think 3 and 4% is okay. I haven't lost a trade for a while. Start risking 5% and 10%, 15%, and it's not a good habit to get into. Okay, so always have it as a sort of 1 to 2% cap. All right, so always try and have a minimum of 1 to 2% minimum risk to reward ratio. So what I mean by that is, make sure you risk 1 to 2%. All right, so the left hand number here should always be 1 or 2%. Okay, now this is your gain. All right, so basically you want to make sure, if you don't want that to be 1, yeah, because you don't want to risk 1% and gain 1%, because in the long run you're not going to be making that much money. All right, if you always risk 1% and go for a minimum of a 2% gain, as you can see at the bottom here, 1 to 2% risk to reward. You can lose 2 trades, win 1, and be at break even. All right. So say you lost 2 trades, and we got a 1% risk. We're down 2%. Yeah. If we win that trade, we've gained 2%. So we're back at break even. All right. Now, if you've got a 1 to 3% risk to reward, you can lose 2 trades, win 1, and be up 1%. Okay. So even if you lose 2, win 1, you are up 1% because of look at what we've calculated. You've calculated your risk to reward, and from a longer perspective, even if I lose trades, I'm going to be up in percent at the end of it. Okay. Make time for the math, and that is a very, very key thing many people forget to do. They just rush into a trade, put the trade on, think they look at their chart and think, yeah, you know what, that'd be a good stop loss, that'd be a good take profit, and they don't have a clue what the hell they're risking. All right, it's a very dangerous habit to get into. Bottom line, 95% of new traders fail or blow accounts by over-lotting and over-risking, just focusing on the gain. Very key point there. And I'll do another voice crack. I'll do a video on lot sizes in the coming weeks, and I'll merge this all together so it becomes even simpler for you guys. Yeah. So we're going to carry on with that £300 account. If you risk 50% of that account, which is £150 on a trade, and if you lose that trade, that's half of your account gone. All right. Psychologically, what's that going to do to you? It's going to make you think, crap, like I do one more trade and I lose, I'm out. Yeah. If you use risk to reward properly, yeah, you could have lost £3 of that trade and still got the same result. So what I mean by that is you've lost £150 from a trade. Yeah. If you had used risk to reward, risked £3, the market would have given you the same result, saying, look, the market hasn't gone in your direction. I've taken you out with a 3% loss rather than £150 loss. Yeah? Sorry, £3 loss rather than £150 loss. Yeah? You get the same result, but you're risking a lot less. You've now got an extra £147 to now use in future trades. Yeah, it just makes sense. Just make sure you think about what you could lose before you even consider what you can gain. Get into that habit first, get into it early, and I promise you, you'll be much better off. All right. Download Stinu. So Stinu is a position size calculator. So if you're not really good at percentages and stuff, if you go on to Stinu, you can literally enter your account balance. You can enter your risk percentage, and you can enter your stop loss in pips. So for example, you're preparing for a trade, yeah, and you've mapped it out already. So what you do is you put that into the app. It will calculate. Obviously, you've got to select your currency pair as well. But after you've selected your currency pair, it will calculate a desired lot size that is safe and will only risk the percentage that you've put into the app. Okay. So download Stinu. It's on Google Play and the App Store. It shows you risk percentage based on your balance and your stop loss, and it calculates appropriate lot sizes for you to keep that risk factor low for each pair you trade. All right, so it's got all the major pairs on there. So go and download it, have a play with it. I don't think it works when the market is closed. It'll come up like an error message. Don't worry, the app isn't broken. It just doesn't work when the markets aren't open. All right. So how to work out your stop loss and take profit. So what I like to do are these 3 elements, yeah? Use price structure. All right, price structure gives you a good view as to where good resting zones are for price. And I'll go into a few examples in a second. And also, it's like to use extra confluences. So, maybe previous price action, current price action, indicators, levels, zones, etc. All right, so basically use the tools available, use the knowledge you already have, use price action to make finding these stop losses and calculating take profits a lot easier on yourself. Okay, so use lower time frames to minimize stop losses and higher time frames to maximize take profits. Now we're going to go into that in a second. This is the point of this video today. That is the goal, to minimize stop losses and maximize your take profits. Okay, and I'm going to teach you how to do that today. So we're going to dive into some examples, and I want you guys to participate. So I've made this presentation as like a I'm going to ask questions, and you guys, I don't know, you can participate if you don't want to, but I want you to try and guess what the answer is going to be before I show it on the screen. All right. If you get it right, fantastic. Let me know down below. So setting up a trade, what do you calculate first? All right, so we're going to assume, well, most traders do, calculate the take profit target, and they focus on their reward ratio because they're like, yes, money, trading's easy. I'm going to win this trade, and that's how much I'm gonna get from this trade, and I'm going to go out and spend it. Yeah, maybe a new pair of shoes or something. Absolutely the wrong approach, guys. If you're in this habit now, please sort of reconsider your approach, okay? Because at the end of the day, you're going to have a very big shock if a trade goes against you. And all right, so the idea of this video is to sort of change your mindset to psychologically make trading easier for you. All right, because that is the goal in trading. It's a big psychological game, and if you don't approach it the right way, it's going to be a lot of mental stress. And you're going to be on the app 24/7, whether you use MetaTrader or another app. You're going to be on the app 24/7 watching your trades, yeah? And as soon as it goes in the red, you're going to start panicking, yeah? So for example, let's say you're in a 4-hour swing trade, yeah? And this move you predict isn't going to happen for at least another day, or I don't know, a couple of days, even a week, yeah? So you put a trade on a couple of hours ago, and you see it's in drawdown, all right? And what most people do is they look at the trade from the MetaTrader app, and they'll go onto a lower time frame to see how it's doing. Yeah, they'll look at, I don't know, the 30-minute, 15-minute, 5-minute, and obviously price action moves a lot more on those charts because it's now 5-minute a bar, yeah, 5-minute a candlestick, or 15 minutes a candlestick, and then another one forms. And what people do is they go on that and they see a massive move on the 5-minute time frame from a swing trade, and then they'll go onto it and get rid of that trade. They'll get out of that trade in drawdown because all you focused on is your take profit and you're focusing on the reward ratio. So what you're expecting mentally is for that to be in profit as soon as you put that trade on, all right? Which is the wrong approach. You're teaching your brain the wrong approach to trading, all right? And I want you to start focusing on drawdown first, because then you'll be more comfortable with seeing your trades in drawdown, because yes, I'm in drawdown, but I'm risking absolute pennies, okay? And you can rest easier. I promise you, after this video, if you take something from it, you'll rest a lot easier, okay? So what should you focus on first? And the reason why most new traders and experienced traders fail, okay, and blow their accounts, and I've just gone over that. So what you should be focusing on is your stop loss and your risk ratio, okay? You need to think about what you can lose before you start thinking about what you can win. Get into that habit early, you'll be better off, okay? Because then you'll start focusing on trades with that in mind, okay? With your risk and your stop loss in mind. Remember what I said about pennies rather than pounds, okay? You'll be risking pennies, okay? And then you'll be less likely to take silly positions or make up positions that aren't really there. So what do I mean by that? So let's say you've had 3 trades you've lost this week and you haven't done your risk to reward ratio properly, and you're in drawdown by, let's say, £200, yeah? So what people do is they then think, holy crap, I'm in drawdown, £200 for the week, that's a lot of money, yeah? And then they'll go onto the MetaTrader app, or they'll go onto TradingView, and they'll look for positions and then start thinking, oh yeah, you know what, that looks like a good trade, put it on. With no confluence, nothing. They just want that £200 back, okay? Because they didn't know they were going to lose that £200 because they did not think about their risk ratio, okay? And now they're panicking and they're going to lose even more. Do you see the bad habit you can get into? If you don't focus on the stop loss and the risk ratio, do not think you're going to win every trade, because I promise you, no trader wins every trade. I do not win every trade, okay? I'm a more conservative trader and I use this approach, okay? And I want you guys to start doing the same. It's a more conservative approach. Now, with the stop loss and risk ratio in mind, you're probably not going to take as many trades as you do if you are only focusing on the reward ratio and your take profit, yeah? Once you start getting this in mind, you're less likely to take those silly trades, as I've just said. All right, now we're going to get into some examples of how we can minimize stops, maximize take profits. All right, I'm going to teach you a very good strategy today. So this is a Swiss franc Japanese yen chart. All right, it's on the daily chart, as you can see at the top here, 1 day. So we're going to set up a potential trade as an example for this video. All right, so what do we see? Uptrend, so we want to look for a buy. Okay. Let's say that's our entry point. Yeah. This is what that trade looks like when we set up a long position. It's a little thing you can use on MetaTrader. You can set up a position like this, and you can set your entry, and you literally just pull that down to set your stop loss, pull that up to set your take profit. Yeah. So let's say, for example, we've mapped out this trade. You know, it's looking very nice. You know, we're happy with it. Yeah. Would you be happy with that trade, guys? That's our entry point on the daily chart. 113,555. Looks like a good trade, right? Stop loss 100 pips. Take profits 250.6 pips. Risk to reward is 1 to 2. So, you know, we've got a nice risk to reward, nice pips. Now, think to yourself, is that a good trade? Would you take that trade? You can see it won as well. So, would you take that trade, yes or no? Now, for those of you who said yes, I'm happy you said yes, because unfortunately, I would not take that trade. All right. And if you said yes, that means I'm going to teach you something new today. All right. For me, 100 pip stop loss, absolutely unacceptable. All right. I do not want to be risking 100 pips on a trade, because if that goes wrong, I'm 100 pips down. And 100 pips is a lot of pips. I don't even get 100 pips in a week sometimes. Yeah. Or even a month. I'll say month, probably week. Couple of weeks. 100 pips is a lot of pips, yeah? So what people do is they ignore this red bit, yeah, and they just think, oh yeah, you know what, I'm going to bag 250 pips from this. That's a really nice trade. I'm going to, you know, that's going to be straight in my bank account. You know what I mean? So once you start taking into account this bit here, it's here for a reason, guys, and it's here to make sure you notice it, all right? And I'm gonna, like I said, if you said yes to taking this trade as it is, I'm going to teach you something new today. I promise you that, all right? So what we're going to do to start making this 100 pips look more ideal for us, yeah, we're going to set up a better stop loss. What we're going to do, we're going to lower the time frame, okay? Now this is a very, very simple approach, guys. Literally all you have to do is lower the time frame, and we're going to look for a better entry, all right? So this is the Swiss franc Japanese yen chart on the 1 hour time frame. Now remember, guys, this is absolutely the same trade, okay? The same trade as this one. We're still going to be taking this trade, all right? But the point of this video is we want to minimize stops, maximize take profits, all right? Remember that along the way. So this is the same entry position on the hourly chart, yeah? Same pair. All we've done is lowered the time frame. So our entry point on the 1 hour is now 113,300, yeah? On this candle. And if we go prior, our entry is 113,555. So literally just by lowering one time frame, we've already got a better entry point, yeah? Lower the time frame equals a better entry, yeah? So by lowering one time frame, you've bagged an extra 25 pips onto your trade. 1 day, 113,555. 1 hour is now 113,300. Okay, does that make sense to you guys? Yeah, and this is literally what sniping entries is. All right, literally going in for that scoped look on where you can get a better entry, and all you have to do is lower the time frame. Okay, so now let's take it a step further. Can we bag even more pips? And the answer to that, guys, is 100% yes, we can. All right, even if we can't, we're going to check it out anyway. All right, so this is that same trade. All right, but we're now on the 5-minute time frame. All right, as you can see from up here, lower the time frame, same pair. All right, same exact trade, what we're going for. This is now our entry point, 113,273, because now we've got more candles, so more reason. We've got a rejection here, rejection there, so you want to enter around this bottom area. But however, on this chart, we've only got one rejection of that level, so we probably want to enter higher up this green candle. On the 5-minute, we've now got, you know, 4 reasons to enter. Yeah, so you've got 1 rejection, 2 rejection, 3 rejection, 4 rejection, even 5 rejections. Yeah, So we've got more confidence to enter. I mean, you could even enter after this little candle here, which is the fourth rejection. Now, 4 rejections is a lot of rejections of a level. It means it's quite a strong level. And you saw from the previous daily chart, we are in an uptrend. Okay, so this would be a fantastic snipe of a position. So as I said, entry point now is 113273. All right, all we've done is lowered the time frame again. So now we've added an extra 2.7 pips to our win, simply not by changing our entry point, but fine-tuning it using the lower time frames. So overall, we've now added an extra 27 pips to our win. And that was so easy, yeah? Literally all we did was lower the time frame, look for a better entry, and we've added 27 pips, all right? 27 pips is a lot of pips. That is a third of 100 pips, all right? Just think about that for a minute. All you had to do was lower the time frame. Easy. So this process works exactly the same for setting stop losses. And honestly, guys, there's no tricks to it. All right, there's really no tricks to it. All right, you're seeing it live as I do it for you right now. There's no tricks to it. All right, the main thing is lower that time frame and look for those better entries and better stops. So again, here's our entry point, exactly the same as the previous chart. So again, same pair. And now we're on a daily chart now. Yeah, so that is the exact same trade that we're mapping up to take. Stop is 100 pips. What is that? Unacceptable. All right, not good. Not good to have 100 pip stop loss, in my opinion anyway. So what we're going to do, we're going to lower the time frame. All right, so here's the 1 hour chart. So this is our entry point here. All right, what I've done is, because in a stop loss, what you want to do is find a prior level of structure, which if you see is this sort of level here. Yeah, so basically we want to set our stop at a like just underneath this level of structure. All right, because if it revisits a prior level of structure, we know, okay, the momentum has swung here. We want it to get us out of the trade. All right. However, if you set it exactly on that line, yeah, so maybe over here, this could be a resting point. It could do what it did here and bounce back off, yeah. So as it did here, look, you see, exact same level, but what it did, it bounced off again. It didn't break that level. So if it breaks this level, and our stop loss is here, we've been taking out the trade safely. All right. If our stop loss is here and it just bounces off this level, we're still in that trade. Okay. It's as simple as that, guys. So entry. Look for previous low. What do we map out? We found that as our previous low. Okay, most previous low. So don't go way back in time and find something that has to match this low. No, look for previous low. That's all we need. That's all the information we need for this trade. Recent low, set your stop just below. That rhymes. That's where our stop will be. That's our revised stop loss. So why do we set up the stop loss below? Because if price creates a lower low, stops us out, and we're buying that market, we now know that the market is setting up to start a possible move to the downside, or in the just a momentum swing in the other direction. Our stop loss takes us out. We minimize that risk, get out safely, and could then possibly look to enter a sell trade depending on our confluences. Okay, so it's basically a safer way of taking us out of the trade. Now here's where I'm gonna teach you a thing or two. All right. So what's our new stop loss looking like? Is it still 100 pip risk? No, it's not. We're now risking 46.6 pips just by lowering that time frame. Okay, we've just cut that over half. All right, so you don't need to risk 100 pips. All right, psychologically, you're now risking less, meaning you can rest easier. Now, if you know that you've cut your stop loss in half, you're not going to be checking the app all the time, because you now know, okay, I'm losing a lot less than what I would have been had I not lowered that time frame. So let me ask you, would you rather lose 100 pips or 46 pips? You'd lose 46, 100%. However, can we take it a step further? 100%, yes we can, guys. We're going to try and lower that even more. So same trade, 30-minute time frame, same method of revising that stop loss. All right, same sniper entry here. And what we're doing is using that sniper method to revise our stop loss. All right. So here we go. Now we're on the 30-minute time frame. And what have we done first? We've zoomed out. All right. So basically, the trade is further on in the future. Obviously, 30-minute time frame. I've had to scroll back to find a previous low. But this is still our entry point in the future. All right. This is just the next low from our entry point. All right. So look for a previous low. That's the low we found. So what do we do now that we found a previous low? Place stop loss just below that level. Okay, guys, it's honestly this easy. All right, that's our new stop loss, just underneath that level. You could maybe give it some room, maybe put it down here if you wanted to give it that leeway. That's absolutely fine. But just below that level is absolutely fine as well. Okay, so anywhere in this region, fantastic. All right, you're still cutting that stop loss in half, and you're not at 100 pips anymore. All right. I'll revise stop loss, all right, just by sniping. So now we have an even smaller stop loss and should now be risking less than that 46.6 pips. So we're going to have a look to see our final numbers, all right? So remember, 46.6 pips was our revised stop loss before going down to the 30-minute time frame, okay? Here are our results. Look at that. 100 pips to 46.6 to 34.4. Look at that. We've cut that by 2/3. We've cut that 100 pip stop loss by 2/3. And it was, how easy was that, guys? Just by lowering 2 time frames. Easy, easy peasy, okay? It just goes to show how we've taken a little more time to set up your trades. You can minimize your risk and maximize your gain, all right? Wait until you see this revised trade, all right? Remember, it's still the same trade, yeah? We haven't changed the targets. We've just changed our entry point, and we've also just changed our stop loss. But our target, our take profit, is still the same number, all right? However, remember, we've bagged more pips from using sniper entry, all right? Remember to work out your stop loss and risk ratio first when setting up a trade. Now, as I've mentioned in the start of the video, if you work out this stuff, work out the stop loss and risk first, okay? Like I said, psychologically, you'll be more comfortable with the trade as it's panning out, all right? You won't be looking, you'll know what you'll be risking, and you won't have to look at your phone as much, all right? You can leave it to do its thing, all right? So the way I like to think of it is, say, for example, you're risking £10 on the trade. Make yourself believe you've already lost that £10, all right? So put in your head, yeah, I've lost £10 in a trade. Put the trade on, all right? Because then if you lose £10, you're mentally prepared for that loss, all right? And you use sniper entry, £10 is 1% your account. It's not going to bother you too much, is it, guys? Because if you win another trade and you've got that 1 to 2 risk to reward, you'll be up 1%, yeah? All right? So even if you lose 2 trades, win 1, you're break even, all right? Get into your head on a stop loss that you've already lost that money. You've calculated that this is how much I'm going to lose, and mentally say, I've already lost it, okay? Because again, if you've mentally prepared yourself to lose it and you win that trade, psychologically, again, it's going to be easier on yourself, okay? And that is the goal here, to psychologically make trading, easier, all right? Easier to deal with mentally. So we're going to recap that trade, okay? We've now used a sniper entry, all right? We've used a sniper entry for our actual entry position itself. We've also used a snipe for our take profit. We've also used a snipe for our stop loss, okay? But what have we done at the end of it? We've minimized our loss and maximized our gain, okay? And you need to have this outlook on, maybe future trades. If you weren't already doing this, trust me, it's a lifesaver, okay? Minimize that loss, maximize that gain, because like I said, I know I keep saying it, but psychologically, it's a lovely feeling, guys, honestly, because you're risking pennies, you're gaining pounds, all right? So here's our first trade setup, right at the beginning when I showed you that trade position. So no sniper entries and focusing purely on the gain, yeah? So our stop loss was 100 pips, our take profit was 250.6 pips, our risk to reward was 1 to 2%, yeah? And remember, guys, for you guys that said, yes, this is a great trade to take, I'm now going to shock you with our revised trade. All right, just by using sniper entries and lowering that time frame, look at the results here. Okay, our new trade setup with sniper entries and focusing on the stop loss and the risk ratio first. Our new stop loss is 34.4 pips. Our take profit is 278.3 pips. Our risk to reward ratio is now 1 to 8%. Now, I don't know about you guys, but that is an incredible turnaround, all right? Even if you are one of those that focuses on the gain and the take profit first, hopefully this tells you, even if you focus on the risk and the stop loss first, that could help you maximize your gain. Yeah, you could be adding more pips to your trade. It is honestly that simple, guys. Look at those numbers. Look at that turnaround. Just by lowering the time frame, using sniper entries, and focusing on your risk first, okay? Look at that. Because let's put it this way, if we thought that was a good trade, we wouldn't touch it, we wouldn't do anything with it, yeah? We wouldn't get this outcome. This is what the big boys are doing, all right? So your trade you said yes to, the big boys are revising it and looking for this sort of position. Now, if you still think this is a better trade than this trade, I don't know what to say, okay? But hopefully after the end of this video, you have now learned how to snipe entries and get a much better position, a much better revised stop loss, minimize that loss and maximize your gain. Look at that risk to reward, 1 to 8%. It's incredible. You would have gained 8% of your account. Yeah? Incredible. Absolutely incredible. So here's our final trade. So you can see, same pair, back on the daily time frame. That is our new trade. Yeah? I must say, I did calculate 278.3 pips on this one. However, I couldn't get the exact same number on here because TradingView was being a plonker, and I lost patience with it in the end. So it's around 277 to 278 pips. All right, much better than the 250 we started off with. Was it 250? Hang on a sec. Yeah, 250.6 pips. So let's put it this way: you've added at least 25 pips to our trade was using sniper entries. Yeah, look at that, 1 to 8 risk to reward. Look at that, wow, unbelievable. Here's our risk to reward, 1 to 8. Here's our stop, 34.4. And here's our take profit, 277.3. Wow. It's exactly the same trade guide. We haven't moved our vision of this trade. We were going to take this trade at the beginning. We've just fine-tuned it a little bit. All right. So guys, that is that video done. Hopefully you've learned a lot about sniper entries and how they can really boost your trading results as a whole. And just don't overlook take profits, stop losses, and risk to rewards because like, as I've just shown to you, you can benefit from really taking the time to work them out. All right, these are the 3 things people overlook when trading, especially new traders. Okay, they don't take this into account. They just look at this green and they think, oh wow, that's a lot of money. No, don't. If you do that, stop it. All right, watch this video and just boost your knowledge a bit about how you can make the trade better for yourself, because basically guys, you're getting more of the green. Yeah, the green was down here, it's now up here. Yeah, like guys, you're maximizing your gain, minimizing your stop. Yeah, and as I've said multiple times, I know you're probably getting bored of it, but psychologically it prepares you and it's such a nice feeling. You can rest easy, you're not checking your trades all the time. You've already mentally prepared yourself to lose that money. Absolutely fine. You can go to sleep and, you'll be nice and fresh for the morning. All right, come and check that trade. Nice win. Yeah, as we've seen it reached target. Okay, so guys, just make it easy on yourselves, yeah? And again, if you've got any questions or, you want to ask me anything or whatever, leave a comment down below and I'll get back to you. Or if you want to email me personally, there's my email. Give me a shout and I'll get back to you on there as well. As always, guys, take it easy and I'll see you in the next video.